Welcome to Season 2 of the Crypto Pulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
This episode is brought to you by Yield app. Earn daily compounding interest on your digital assets with its intuitive web platform. And don't forget to refer your friends to earn extra rewards. Visit yield.app for more information. Hello and welcome back to the Crypto Pulse podcast for another one of our weekly episodes about crypto and macroeconomics. Ben, once again, great to see you.
Yes.
And how are you feeling now?
Yeah, not too great, honestly. I've somehow managed to pick up COVID for the third time.
Right.
But this has been okay versus the last time I picked it up in December. But yeah, just a little bit croaky today, so you have to bear with me.
I will bear with you. I think any listeners that have been with us since the start of, well, either season 1 or season 2 will remember you had a couple of weeks out the show due to being quite poorly with COVID. So I'm sure everyone's going to wish you a speedy recovery this time. But thankfully you have all the antibodies to help you.
I do.
Right. So maybe we should start this week by talking a little bit about what's been going on in the market. It's been a relatively quiet week, but you put a tweet out, it was either yesterday or the day before, saying Bitcoin is looking a little bit, and then the poo emoji, just saying. So what are your thoughts on the market as a whole? Because we did see a bit of a recovery.
Yeah, it's a difficult one. I mean, looking at the market at the moment, there really isn't an awful lot to be optimistic about. The tweet that I put out this week was referring specifically to the Bitcoin weekly candle. So for anybody that knows anything about trading, they'll know about long upper wicks. And whenever we see these long upper wicks, what we typically getting is a rejection at the highs. Looking at Bitcoin today on the weekly candle, we pumped up to about 32,000 on Tuesday. And since then, we have sold back down to 30,200. That rejection of the highs for me on the weekly, with the macro backdrop that we've got at the moment, is unsettling. And I think potentially lends itself to us seeing much lower prices in the coming weeks. But that is of course just a guess. But I think that we may see the mid to low 20s.
What I was really looking for after the S&P 500 had a bit of recovery, and therefore Bitcoin recovered, and the Nasdaq, etc., was I was really looking for Bitcoin to kind of get to that 34k mark and then find some support around 32 maybe, and we've just not seen that. There's just not been enough buying strength, and I was dubious that would happen. There's quite a few analysts and traders and well-known people on Twitter that were kind of saying that. It's like, yeah, okay, I'm going to go long now. We're at 28,500. I'm going to go long and probably sell at 34. But when the crowd all has the same idea, it very rarely plays out, and we only have to look at the end of last year to confirm that thesis. So I've been very, very cautious, like you, just dollar cost averaging into amazing projects that we really believe in, with small amounts. And I think, honestly, that is one of the best strategies at the minute. If you're a professional trader and scalper, then great. But I agree. I think we could see some further falling, but it does give hodlers a great opportunity to dollar cost average into Bitcoin, of course.
It definitely does. And I think the other thing with dollar cost averaging is, people often ask me, how much should I be buying per week? I would be saying that you want to probably try and spread your dollar cost averaging over probably the next 12 months. I think 2023 is going to be a great buying opportunity. I think we're going to see rock bottom prices on most crypto assets. So yeah, exactly what we're doing, which is we're allocating a small amount per week, and we're buying things that we think have got potential for the 2024 bull run.
Yeah, things that people are actually building really good apps, projects, and decentralized applications on, and of course Bitcoin as well. So
absolutely,
it's not a time to hold junk in your portfolio. Far from it. I think that's a dangerous play. But of course, do your own research. Isn't financial advice. We just simply convey some of the things that we're doing, and we like to share those. So I think it's going to be interesting to see where the S&P goes over the next few weeks and what the next CPI announcement is like, because a lot of these CPI announcements where they talk about interest rates, the current price is really reflective of the expected news. So I think that those prices are already built in. So if we see the Fed kind of like take the pedal off the gas in terms of putting interest rates up, we could see a little bit of a relief, and that might be a good trading opportunity potentially. So we'll wait and see on that one. It's going to be a long while for all of this to play out with, the quantitative easing, the excessive money printing, and the COVID and supply chain situation. I think we're at the start of this really playing out, and it's unprecedented. So we've never seen anything like this in markets before. Yeah,
absolutely. I was also going to say that the Federal Reserve this week have just started on their policy of quantitative tightening. So they've got an asset portfolio of almost $9 trillion, and they've now switched from quantitative easing into a period of quantitative tightening, which means that they're going to be trying to reduce that balance sheet over the next year. Now, that is one of the other tools that they use in line with raising interest rates. It's one of the things that they bring to the table when they're trying to reduce rising inflation. So the actual impact of this quantitative tightening isn't really well known. They've only really done it once before in 2017. It was a bit of a non-event. But I think with the current macro backdrop and some of the other things which are going on in the world at the moment, we might see this having a bigger impact on the financial markets. And actually, Jamie Dimon this week, the chief exec of, I think it's Goldman Sachs.
JP Morgan,
of course it is. He actually sounded quite panicked in an interview that he did this week, where he spoke about the oncoming hurricane, and he said that everybody is going to need to prepare for this, regardless of where you are economically. So for Jamie Dimon to be panicked, I think that's indicative of what is potentially down the road. But that said, Jamie Dimon is wrong 9 times out of 10. So it'd be interesting to see how this plays out.
He does like to backtrack on his comments. Famously he called Bitcoin a scam, and then JP Morgan were found buying it.
It's now their preferred alternative asset. I think that was that was the latest press release that they put out. So they definitely flip flop, and I also find that publicly Jamie Dimon is quite contrarian. He tends to say the opposite of what's really going on at JP Morgan. But as we said, we do have this policy now of quantitative tightening. We've got interest rates rising. Global economy is slowing down. The job market is cooling off. Housing market is starting to cool off in the US. At the moment, I have to say, because the Fed's policy really is that they wanted to do this, and they wanted to create something called a soft landing, which is rather than crashing everything all at once, they sort of bring things to a simmer. And at the moment, it does feel like they're pulling it off. I feel like they've raised interest rates slowly, and the market has kind of absorbed that well. What the quantitative tightening adds to that sort of recipe is yet to be seen. But my gut says that we're probably heading for a bit of a recession in 2023. I think it's difficult to implement all of these financial policies and not create a recession. But everything is cyclical, and we've had recessions before, and we need them to be able to sort of move into the next period of growth. So lots of opportunity for sure. But as we say, dollar cost averaging into positions from now is a really good strategy.
Definitely. And for anybody that's a little bit entrepreneurial, a great time to look at starting a business. almost a side hustle. I hate that term,
Side hustle.
by the way, because it just sounds wrong. It sounds like some dodgy grifting you do on the streets.
Yeah.
But
That is what it is, isn't it?
A side business, yeah. So and create cash flow so you can invest back into the markets if that's what you decide to do.
Yes.
Don't just rely on that job. So yeah, okay, we'll see how this plays out. So I have a question for you, and I don't think I've ever asked you this very much. When you were a wee nipper, or when you were a bit younger, were you a gamer?
I was, yeah, and I still am to some degree. I've still got a Nintendo Switch and a PS4, which I will turn on every now and again. But yeah, as a kid, I think I had the PSX, the original PlayStation, and you'd catch me playing games like Grand Theft Auto, The Sims, Roller Coaster Tycoon, the really sad games.
No, that like I was the same. So I was a PC gamer, but this was like probably 2000, when I was really into PC gaming.
Yeah.
So I would play things like Theme Hospital.
Oh, I love Theme Hospital. Yeah, that was such a good game.
Required psychiatry.
That was it, and the Invisible Man syndrome, and the little people with the huge heads.
Invisible Man syndrome, was that an actual thing?
Yeah, it was. They used to have really strange illnesses. There were people that had their heads blow up, and you had to build a machine that would pop their head.
Oh, that was bloaty head syndrome.
That was the one. Yeah, it's a real thing.
That's what you get when you get too many followers on Twitter and think that you're right all the time. You get
totally. I could name a few of those. Yeah,
we'll put them in the show notes.
Yeah,
joking.
Right.
Yeah, it's quite funny. It sounds like we're playing similar types of things that were like building out stuff. Yeah, SimCity was another one. Like that was something I was really into, and Transport Tycoon. Yeah, I used to spend absolutely hours on that. And then I think my other favourite consoles were, I had a Mega Drive, which I just played on all the time. Yeah. Probably not the healthiest thing as a child, but I was obsessed with computers and tech back then, which really has, followed me into the rest of my life in some ways, because I think one of the big reasons I got interested in crypto was because of the technology and the what can I say? The exciting horizons that I saw with this tech and what it could do. And I found it really, really exciting. And I remember in 2017 when I started reading about crypto and blockchain, I got that kind of same excited feeling. I felt like I discovered the internet all over again, or these games. So it kind of leads us on to one of our main topics on today's show, because a few weeks back we had the CEO of Unix Gaming come on the show to talk about getting paid to play computer games.
Yes.
And if you'd have told me that in 2000, I probably would have chosen that as a career. But there's quite a lot of stuff going on in the space. So we wanted to just highlight some of that today. So the GameFi space is absolutely huge. It's an evolving space that constantly innovates as time goes on. Traditional game development studios are seeing the huge amount of investment capital in the space and looking to see how the blockchain could solve some of the problems they face, or enhance a player's experience. And we did touch on that during the Unix Gaming interview. But a few weeks ago, John Hanke, I'm not sure how you pronounce his last name, CEO of Pokémon Go development team Niantic, was closing out the keynote address at his company's first ever developer summit. And before coming to a close, he started to discuss something big. And this is something about them exploring how to incorporate blockchain technologies into its game. Now, do you remember the huge Pokemon Go craze? I think it was something like 2015. It was absolutely mental.
Yeah. I do. Actually, Pokemon was one of the games that I used to play a lot of. And actually, with my Nintendo Switch now, I do play the Arceus game every so often. It's one of the most well-known franchises, and there's so many directions they could take it in. And actually, Pokemon Go, when it was announced, I mean, I just remember feeling absolutely ecstatic about what it was, using geotagging on a phone to go around and explore a real world space and capture these little creatures. I thought it was genius. But it actually came with a bit of a downside. I mean, all of these sort of like young millennials walking around staring into their phone. People were walking out into traffic and getting into all sorts of danger. So I remember there was quite a lot of negative press around it too. But I played the game for a while and it was incredible. It was really good.
I've got friends that still play it, weirdly, but that's another topic altogether, I guess.
Yeah.
But do you know what I thought was really cool about Pokemon Go is yes, people are glued to their phones, but at least they were out and about and walking and moving rather than sat at a PlayStation eating Domino's pizza and scratching their nuts and playing games. So
absolutely agree.
I think that there's a huge positive to that. So I like these games that get people out and moving and kind of seeing parts of a city that they live in or traveling to different cities and having that social environment, because I think gaming can be quite insular, and a lot of people, real gamers, have friends that are gaming friends and probably have never met in real life, and they just talk through headphones and videos, which is cool. But I think to combine this with actually the real world is a really neat thing. So I really rated Pokemon Go at the time, and it was quite funny because in 2015 I was living at the Olympic Village in Stratford in East London, and there was, I think they called it a Pokemon Go gymnasium. Is that the correct terminology? Anyway, there was this. Yeah, so there was this Pokemon gym right next to my apartment block, and there were just hundreds and hundreds of people like turning up to claim whatever it is. So I found that quite weird. So I downloaded the app and dabbled, and then I thought, you know what, I better not go down this rabbit hole because I've got other things I should be doing with my life. But nevertheless, it's interesting, and I think blockchain is the obvious thing for these companies to start using so that they can improve the game. And there's loads of different things that they could do. For example, having NFTs that are sellable on the platform. And I think also like verifying check-ins and locations is a lot better. And not to mention the fact that a lot of these gaming companies are owned by big corporations, and they're really using a lot of that data for data farming and then advertising. So it allows people to actually have sovereignty over their data as well. I want to say a big thank you to YieldApp for sponsoring this podcast. Now, we may be in the midst of a bear market, but that's no reason to stop earning on your digital assets. YieldApp allows you to earn daily compounding interest on the biggest digital assets at the click of a button. YieldApp is a licensed fintech company built by a team with a strong background in traditional finance. YieldApp offers instant asset conversions, fiat on-ramp, auto compounding, and security features such as activity log, transaction history, and more. Simply deposit your digital assets and click to start earning daily rewards. And you can earn up to 1,000 of their native token, YLD, by referring your friends to YieldApp. You will also automatically join their monthly referral competition for a chance to win massive prizes. Today, we have a special offer for our listeners. Go to yield.app/CryptoPulse and sign up for an account to enter a giveaway with a chance to win up to 3,000 YLD tokens.
I also think the other piece for this is, especially with games like Pokemon Go, is that you can purchase items. You know, there are marketplaces. You can buy outfits. You can create unique artworks, and I think things like that are really lend itself to, as you say, NFTs and digital ownership of these assets. And yeah, I think it just adds another layer of ownership in these games.
It does. And what it does is it creates a whole economy. So you can have people that can design these outfits. You can have people that design these different skins and things, and they can then be traded on different platforms. So and then they can get paid royalties every single time that somebody transfers it. And what's really, really cool is a lot of these objects can then be transferred into different games. So if you've got like cross-chain protocols or games that are built on the same chain, then you're able to do that. And I just think this will open up a whole economy for people. And whilst I'm not an advocate for staring at a screen for 12 hours a day, I think this does give developers, gamers, artists, creatives a new way to make money. And I think in the current environment, that's going to be really critical. And I think that the gaming industry is just going to get bigger and bigger and employ more people, which I think is a good thing. But it needs to be done in moderation, of course, because you don't want to be living in that kind of like Ready Player One environment. I don't think that that's too healthy.
Well, it's a really interesting point. I was actually watching Bloomberg the other day, and the chief exec of a company came on, and their whole premise is that they are building games which are designed to rehabilitate people once their jobs have been replaced by artificial intelligence. So I actually, whilst that's quite a sinister angle, I actually see this space evolving in ways that we probably don't expect. I think with kind of like the advent of virtual reality, augmented reality, and some like the improvement in some of these graphics capabilities are just unreal. Like the Unreal Engine 5, which has just been released. I mean, some of the graphics are, you can't really discern between sort of reality and the game, sometimes. So yeah, I think this space is only going to grow, and it's really exciting to see how blockchain is going to play a part in that.
Niantic, who are the Pokémon development company, isn't the only traditional game company interested in branching into GameFi. So Japanese entertainment and gaming firm Akatsuki, easy for them to say, announced last week they have raised a $20 million fund focused on investing in Web3 projects. So there's quite a lot of companies raising funds for Web3 builders, which is cool. So the fund, dubbed Emoot, will look into back startups working on projects in GameFi, NFTs, and the metaverse. The name Emoot was chosen to signal that NFT consumption is based on emotional values. The business has formed for investing in crypto adjacent projects, having funded more than 20 early stage startups, including rapidly scaling move to earn startup StepN. I was checking that on Twitter actually earlier on. So you get paid to exercise.
That's a great idea.
This is where gaming gets a big tick box from the health and wellness perspective.
Right.
Its investment focus is 50% in Asia and 40% in the US. So these big gaming companies are really starting to get involved in this in a big way. So I think any blockchains and platforms that they're starting to use to build on, in my mind, represents a good opportunity for retail investors to get involved. Again, not financial advice, but that is just my perspective on things.
Yeah, it's a really interesting idea. I've kind of seen this concept of being paid to exercise a few times now, not via blockchain, granted, but it's a really interesting way to sort of get people moving, and it makes sense that would be integrated into gaming. I mean, how great would that be for something like Pokémon Go, where you're actually not just able to sort of trade digital assets, but you also get paid for roaming around?
Yeah, I mean, I seem to pay to exercise, and I get paid to be tortured by my coach.
Right.
So maybe if I got paid to do it, I'd feel even more motivated.
It'd be great, wouldn't it? A great business model.
Yeah, definitely. But with this huge area of innovation and profit, the GameFi space also carries this stigma placed on it by traditional gamers. It's a stigma that GameFi games only care about profits rather than the product. And there was an interesting article on Bloomberg written by Jason Sharia last year, which brings up the point that blockchain gaming is a solution to a problem that doesn't exist yet. I quite agree with that. And instead is just a buzzword concept to get investors salivating. Some may argue for or against that point, but the recent research released by Arcane Research may back up the skepticism felt by some. So the report was focused on the number of active users on the top 6 Ethereum-based blockchain games and shows a user decrease of 96% based on Q1 2021 compared to Q2 2022.
Wow. Okay. So actually losing users then. Interesting.
Using losers, but I was thinking about this. So I was doing a bit of research on this before we started recording today. And a lot of these games, Ben, are not particularly well known. And I think what needs to happen here is that the Web2, the traditional gaming companies, the games that have a brand, the games that have mass adoption already, when they start moving into this space, you won't see this drop off. And a lot of these games that have come out are kind of like version 1 on a blockchain game.
Right.
I don't know if you've played any of these blockchain games, but they're not the best. And there's a reason that that probably a lot of people like dip off. And I also think it's probably reflective of the market as well. So I just remember last year, a lot of friends were saying to me, so I have a friend that had this horse racing game, which was on the Ethereum network. And if he could win the races, he got paid and the horse became more valuable and everything. But as retail investors kind of thought, well, prices are going down, gas fees are going up, the engagement went down. And I think there's more than one factor that contributes to this decrease. And I think those factors are market sentiment, new technology, and also the fact that that we need to get the Web2 gaming community onto Web3. And I think when that happens, we won't see these kind of statistics, if you like.
Yeah, that's actually a really good point, because when you take out the hype from the crypto and blockchain market, actually these games, things like Axie Infinity, are then being pitted up against the traditional gaming sector. You know, they're then being sort of judged on their sort of own merit. You know, how good are they as games? And whilst Axie Infinity is a nice game, for example, something that I've played, you sort of buy some land, you can farm and attack people. It's it's an interesting gaming experience.
Attack people.
Yeah, attack people is great.
Land and attack people.
Yeah, it's wonderful. But it's not as good as something like I don't know, Fortnite on the PlayStation. But people would choose to play Axie Infinity because not only do you, is it a nice gaming experience, but you also get the pay-to-play piece, which you don't get with something like Fortnite. But as you say, as gas prices go up and the hype comes out of the market, people are then having to choose between, a really brilliant game that is designed for the PlayStation or something that's actually, just a bit okay. And I think that's probably why we're seeing those statistics now, is because people are moving back to the games that they love. Yeah,
or perhaps it's more crypto Web3 people trying this to get paid rather than hardcore gamers. So as soon as the financial incentive may come out of it, then they're just not bothering so much.
Totally.
But I'm not worried by like that 96% drop. When I say it out loud, that sounds a bit mad. I think there's more to it, and we're very, very early in this. But when we start seeing some of these, big gaming development companies start using some of these Web3 platforms, we're gonna really see a huge spike in this space. And it's one of the things that could certainly drive the next bull run. Definitely.
Yeah, absolutely. I mean, this is a conversation which we've had a few times about what is going to be the next big thing. Every bull run seems to have, one pivotal technology. In 2017, it was the ICO. This time around, it seems to have been DeFi and NFTs. And you're right, I think the 2024 bull run is going to be about integrating real world things into the blockchain using Web3. And I think gaming is going to be a huge chunk of that.
If you're listening to the show, after you've finished listening, tweet us crypto_pulse and let us know your most favorite blockchain that development companies can use to build games on, because we'd love to get some of those projects on the show. I know we've had units, we've reached out to Axie Infinity, we've got a couple of others that we're talking to, and we're going to be doing a very exciting series with a very well-known Web3 blockchain that we've spoken about on the show previously and interviewed their team. But there's more out there, and we'd like to get our eye in on this, because I think over the next year, 18 months is a very, very good time to see what people are building, so we can be ready for that bull run. And that's one of the things that we did in 2018 reasonably well. I don't think we were particularly amazing at it at the time, but we did a reasonable job of finding things that were going to be good in a bull market, and that worked quite well for us. So
yeah, absolutely. And I think the other thing to remember that is that you have to be dynamic, and things will change quickly. And whilst we've obviously got some time to prepare before the next bull run, before the market turns, things do change monthly. So something that you might think is a great investment to be dollar cost averaging into now, it might not necessarily be the same in 12 months time, which is why we say, really take your time and move into these positions slowly, because, the great opportunities will present themselves.
They certainly will. Okay, so let's go over to our final segment of the show today. And it's my favorite segment, which is the weird world of crypto. And of course, it wouldn't be a weird world of crypto without our favorite entrepreneur, Elon Musk.
Past a couple years have been meme city.
Now, Elon Musk may love Dogecoin, but the co-creator of the meme-inspired cryptocurrency isn't fond of the Tesla and SpaceX CEO. Now, Jackson Palmer, the Australian co-creator of Dogecoin, recently spoke to Australian news outlet Crikey. terrible impression, where he gave his opinion of our new Twitter overlord. We could have probably put a sound effect in there.
That was great. Keep it.
Thank you very much. Now, Jackson described Mr. Musk as a grifter who sells a vision in hopes that he can one day deliver what he's promising, but he doesn't know that. He's just really good at pretending he knows. That's very evident with the Tesla full self-driving promise. I think that's probably a bit harsh, but Palmer said that in 20 years. Yeah, a little. This guy has managed to put a Tesla Roadster into space.
Totally. And actually the self-driving car
piece.
What the
point of that was.
Yeah, no, just because he could, just to show that he could, I presume. But yeah, I mean the self-driving car thing is it's a mega challenge, I was reading somewhere that when they upload images or when they upload video, so that they can program the AI, there's something like 1 million frames per second, because they have to be able to give the AI that much data. So when they upload a 30-second clip, it's something like 10 billion images that they've got to program into this AI system, which is just a gigantic file. So every tiny increment that they make when they're sort of programming this self-driving artificial intelligence, the amount of data is phenomenal, and it's a massive undertaking. And I think from what I understand, I've seen some videos of these things driving themselves, and they seem to be doing an okay job. It's a brand new technology. These things do take time, but he's one of those guys, isn't he, Elon Musk? I think he speaks things into existence. He sort of like tells the truth in advance. So he'll tell us all that he's got this amazing AI self-driving car system. And whilst that might not be true today, he probably will pull it off.
Yeah. What's your favorite thing? Telling the truth in advance?
Telling the truth. It's one of my favorite quotes. Telling the truth in advance. Yeah. It's not a lie if you can make it true.
I also think what that kind of leadership does is it inspires the best people to go and work for him as well.
Yeah.
But anyway, so Palmer had said that in 2018, he gave Musk the coding script to a bot that he wrote to help Twitter detect if there was a cryptocurrency scam in user mentions. Now, this is what he said. He said, Elon reached out to me to get hold of that script, and it became apparent very quickly that he didn't understand coding as well as he made out. Palmer said, he asked, how do I run a Python script? I think even I could probably figure that one out.
Yeah, right.
After I gave him the script, I wasn't a fan of him, Palmer said. He was basically insinuating that Elon is a bit thick and he doesn't know how to run a few lines of code. So, but on Tuesday... Carry on, sorry.
No, I was going to say that's interesting. I honestly wouldn't be surprised if he doesn't know how to do these things. I've listened to him in interviews before, and I think he has definitely got genius qualities. But people assume that genius people are genius at everything. I think he's a pretty good engineer. I think he understands physics quite well. He's obviously got a leadership style that works. He's running 3 of the most exciting companies in the world at the moment. I can kind of forgive him for not knowing how to run a few lines of Python. I don't think that's particularly useful in his sort of day-to-day life, launching rockets and building electric cars.
Yeah, you employ people and then you execute your vision on getting humans to Mars. It's
totally.
like, there's plenty of people that could do that. So a bit harsh. So anyway, on Tuesday, as I was saying, Musk shot back and said, if it's so great, he should share it with the world and make everyone experience Twitter better. Musk also questioned the extent of Palmer's involvement in Dogecoin, because obviously, Musk has been a huge advocate for Dogecoin. I don't know whether that's still serious or not, but probably. Palmer always forgets to mention that he never wrote a single line of Dogecoin code, Musk tweeted. Responding to another tweet by a user trying to explain how reasonable it was that Elon didn't understand how to run the Python script, Musk replied that my kids wrote better code when they were 12 than that nonsense script Jackson sent me. Jackson Palmer is a tool. So this is what the world's wealthiest man or one of the world's wealthiest men trolling somebody else on Twitter. Don't you just love it?
I do love to see it. Honestly, I'm surprised sometimes that Twitter is free. It's really just the most brilliant place to go if you're bored and you want some entertainment. I mean, I can't remember another time in history where we've had, billionaires and world leaders that are able to just troll each other online. It's really a sight to behold.
So I don't really know too much about Jackson Palmer.
I
don't know how much involvement he had in Dogecoin, right?
I've never actually heard of him. I don't know anything really about the founders of Dogecoin, other than they started it as a little bit of a joke and it sort of got out of control.
We have reached out to the Dogecoin team because we do want to get them on the show. I mean, why wouldn't we? I have lots of questions for them, but we haven't heard back yet. So I'm not sure whether they're doing media appearances at the minute or whether they're just taking it easy right now, because I don't think there's much development going on that blockchain.
I don't think there is at all. There was something that was going on earlier this year where Elon was trying to reignite the developer community within Dogecoin, wasn't he? He was trying to hire some brilliant people to kind of pick it up and turn it into something. But it's interesting that Jackson Palmer would say this about Elon, because I do sometimes listen to the things that he says or the things that he tweets, and I think it's questionable. The fact that I'm not convinced he fully understands what Bitcoin is. I'm not fully convinced that he understands how the Lightning Network works. I hear him talk about this stuff and it's always a bit sort of questionable. So I wouldn't be surprised if he didn't know how to run a Python script. Wouldn't surprise me at all.
Well, just as well, he's got lots of money to employ people to run Python scripts for him. But it won't be Palmer's one because apparently it was rubbish.
Right,
so
okay.
There we go. So that's all we've got time for this week on our weekly episode. We've got the Zilliqa team coming on the show next week for a very special interview. We had to push that back because the chap from their team that we're interviewing was unavailable, so that's coming up. And we've also just this morning locked in a very, very, very big interview with one of the world's biggest cryptocurrency exchanges.
Yes.
And a very, very big thank you to Elliot from the VRA team, for the Veracity team, for linking us up. So Elliot, we really appreciate that. That was very, very kind of you. But that's going to be a huge interview. So what we'll do is we'll put a tweet out about that once we've got the date locked in, and make sure we get all of your questions from the community, and we'll put those forward to them. So
absolutely,
some big guests coming on.
Yeah, absolutely. Really exciting stuff. Very much looking forward to this big exchange coming on.
Excellent. Ben, we'll chat again next week. But until then, make sure you follow us on crypto_pulse on Twitter. And we'll chat to you soon.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Crypto Pulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Crypto Pulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.